Hello everyone and welcome back to Aurilla Crypto Land. In continuation of candlestick pattern series, here I am with the double candle pattern known as counterattack pattern. This pattern consists of two opposing candles where the first candle follows the trend and the second candle forms against the trend. The closing price of both candles are equal or nearly equal to each other, and a slight difference in the closing price of these two candlesticks will not affect the pattern confirmation. However, ideally the closing price of both candles are exactly the same and their bodies are also nearly equal. In this pattern, during an uptrend, a green bullish candle initially forms along the uptrend path, but as the trend continues, the second candle opens with a gap down. As sellers gain strength and buyers weaken, the price gradually declines and eventually the gap is filled and the closing price of the second candle aligns with the closing price of the candle before it, forming a price level. This indicates a decrease in the uptrend movement, weakening of the uptrend, and the possibility of a price reversal from uptrend to downtrend. In a downtrend, the counterattack pattern forms like this. First, a bearish candle appears along the downtrend path. Subsequently, the second candle opens with a gap down compared to the first candle, indicating a continuation of the downtrend. However, as traders actively gradually weakens, buyers gain an advantage. The price slowly rises and ultimately the gap created is filled. The closing price of the second candle aligns with the price of the candlestick before it, forming a price level. This signifies a weakening downtrend, stronger buyers' presence compared to sellers, and the potential for a trend reversal from downtrend to uptrend. On this chart, a powerful downtrend is forming. At the end of this trend, a large bearish candle appears, but in the continuation, another candlestick opens in the same direction as the initial downtrend, and gradually, due to buyers' strength, the price rises. And finally, buyers gaining momentum and weakening of the downtrend, a strong uptrend emerges. In the second chart, similarly, we see a counterattack pattern forming, aligning the closing price along a path. The price gap is filled and a powerful uptrend emerges here. And in the next chart, in a downtrend, the counterattack is forming and the closing price of two candlesticks align within a price range. This price gap, which initially forms with the opening of the second candle, is filled and we witness a continued uptrend. On this chart, let's see how this pattern may manifest in a price trend. Look, in a downtrend, a negative candlestick appears, and the second candlestick opens in the same direction along the path. But as buyers gain strength, the price gradually rises and the closing price of both candles align within a price range. This price gap is filled and the strong uptrend follows. In the next chart, in a zigzag price movement, a powerful uptrend takes shape with ascending candle aligned along the path. However, at the end of this strong trend, a bullish candle forms and the following candlestick opens in the same direction. But as sellers weaken and buyers gain an upper hand, the price gradually decreases. The closing price of both candlesticks align within the same price level and the price gap created at the beginning of the trend and the formation of the second candlestick is filled. The price trend shifts from uptrend to downtrend and we observe a stronger downtrend here.